Drew, plenty of commentary about this deal. In the main, it's seen as a good thing, and yet we see shareholders of Allergan sell that stock off to the tune of 14%. Is that a little bit of an overreaction?
Well, I mean, you're seeing AbbVie, the shareholders, lose some of the stock here. I think, because they are going to spend a lot of money and pay a big premium for a company that has some of the same problems that they do. I mean, Allergan and AbbVie both are dominated by big, older drugs that make up a huge portion of their sale. They've been looking for what their next acts are, and it looks like their next act is each other. Now, it probably buys them some time to figure out what the real future of this combined company is going to be 5 to 10 years out, when those things start to really face more serious competition and lose some of the sales power that they have now. But it does seem to be a deal, and this is kind of how the executives are talking about it, to buy them time to do that. I mean, it's going to throw off a ton of cash. It's going to make up, a lot of money. They're going to get synergies. It will give them some flexibility. It doesn't necessarily come with the, hey, we've got all these new great pipeline drugs. This is an R&D driven deal. This is a giant growth story. But it is probably a decent financial story, though, you look at how the shares are reacting, some skepticism in Allergan's stock and some upset in AbbVie's. And, you see some people questioning the strategic rationale there, I think.
Okay, let's talk about that. The deal is notionally valued at kind of 185. Allergan's trading currently at 164.95. Explain the gap.
Well, I think there's a couple of things going on there. One, if you look back to that giant Bristol-Myers Celgene deal that we had at the beginning of the year, we saw a lot of serious investor opposition to that. It did get done. I think that's worth very much keeping in mind. And then a second point on that deal, yesterday we saw the U.S. Federal Trade Commission come out and say that in order for those two drug makers to get their mega merger through, they were going to have to sell off one of Celgene's biggest assets. They've got a blockbuster drug. It's the number 3 thing over at Celgene. It was one of the reasons that Bristol-Myers was buying this thing. It's worth over $2 billion a year in sales. And so they're having to get rid of that. So I think that there are probably hurdles or at least obstacles ahead for this deal. We will see if they actually present a meaningful problem to getting it completed. But it doesn't mean that this thing is going to just sail through and everything is going to be rosy from here on out.